A profound shift is unfolding as inherited assets move from older to younger generations, shaping not only individual financial outcomes, but also broader economic patterns. This generational wealth transfer is occurring at a time when the financial realities facing recipients differ sharply from those of previous decades. Millennials, now the primary inheritors, encounter a landscape defined by high housing costs, persistent student debt, and the prevalence of gig and contract work rather than stable, long-term employment. These factors influence how newly acquired wealth is managed and deployed. One of the most notable changes in this transfer is the age at which inheritances are received. Unlike previous generations who typically inherited in their 50s or 60s, many millennials are accessing inherited wealth in their 30s or even earlier. This earlier timing intersects with life stages that often involve starting families, buying homes, or paying off educational loans. As a result, the immediate use of inherited assets tends to focus on debt reduction rather than traditional investment. Surveys and background research suggest that millennials are more likely to prioritize paying down student loans and mortgages, reflecting the financial pressures unique to their cohort. This behavior stands in contrast to older recipients, who often directed inherited funds toward expanding investment portfolios or retirement savings. Investment preferences also show a marked generational divide. While older generations have typically favored established financial instruments like stocks and bonds, millennials display a stronger interest in alternative assets and socially responsible investment vehicles. Environmental, social, and governance (ESG) funds, as well as digital assets, attract a larger share of millennial portfolios than they did for previous generations at similar life stages. This shift is partly a response to changing values, but it also reflects a desire for investments that align with broader social and environmental goals. Asset managers and financial institutions have responded by offering new products tailored to these preferences, although it remains uncertain whether these trends will endure as recipients age and their financial priorities evolve. Housing markets are directly affected by this wave of inheritance. Many younger recipients use inherited funds to enter urban property markets, contributing to increased demand and rising prices in major cities. While this enables some to overcome long-standing barriers to homeownership, it also intensifies competition and can push non-inheritors further out of reach. The concentration of inherited wealth in certain regions, especially urban centers with decades of property appreciation, reinforces geographic disparities and shapes migration patterns. The experience of receiving a significant inheritance can be challenging for those without prior exposure to wealth management. Financial advisors report that many young inheritors initially make impulsive decisions or adopt overly cautious strategies, keeping assets in low-yield accounts due to uncertainty about market conditions. This has driven demand for financial literacy programs focused on inheritance management, though gaps in knowledge persist. Taxation and policy responses have not always kept pace with the changing dynamics of wealth transfer. Inheritance taxes and estate planning rules vary widely, and existing frameworks often struggle to address the complexities of modern family structures and asset types. Policy debates continue over how best to structure taxation to balance fairness, economic mobility, and revenue needs without discouraging productive investment. The broader economic impact of this generational wealth shift is still taking shape. Some analysts have speculated that large inheritances could reduce labor force participation, but current evidence indicates that most recipients continue working, with some using newfound financial flexibility to change careers or reduce hours rather than exit the workforce entirely. Meanwhile, the influx of inherited capital into housing, investment, and consumption patterns is already visible in market data. What remains clear is that the transfer of wealth across generations is not occurring in isolation. It interacts with other powerful trends, rising automation, evolving labor markets, and shifting social priorities, to create a landscape where the outcomes are difficult to predict. As these forces converge, they are reshaping economic expectations and prompting ongoing experimentation with new models of work, wealth, and opportunity.